Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Polygon Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right-hand corner of your screen. Also, there are two donation links down below in the description. If you want to support Ukraine, feel free to do so by going over to the official websites and donating directly to the funds. Thank you all for the support, and let's get straight into the TA. So as you can see, we have a Fibonacci retracement on the chart over here. This is the swing high at $2.91, and this is the swing low at 31.69 cents. And as you can see, this is the low that we printed back in June, and we have our Fibonacci retracement with the extension levels to the upside. So we have a major target here at $11.50, and I do think that is a doable price in the next bull market. So from where we are right now, that is going to be a 1,381% of a move to the upside. And I do think that is possible. That is definitely possible for Polygon Matic, considering all the partnerships that the project is getting during this bear market. It goes to show that they're building, and during the next bull market, I do think we are going to be sitting around those prices, if not higher. Keep in mind, we could go higher, we could go lower, all depends on the hype behind the project. So on this Fibonacci retracement, as you can see, we have our golden ratio here, anywhere from $1.25 all the way up to, I would say, let's bring that up to $1.41. Now, as you can see, this is the range where we dropped down to back in January of this year, back in February of this year, and back in March of this year, as well as April, before inevitably dumping towards the end of April into that capitulation, bottoming out in May here, having another retracement to the upside, forming a falling wedge, and then dropping down to this low in June. From there, we have went 3x. Okay, so this was a very nice entry point. I have been buying Polygon Matic at these prices over here. My average buy-in price, I believe, is 44 cents. So I'm quite up on Polygon Matic, but I have no plans on taking profits right now. I am currently staking, and that's everything that I'm planning to do with my tokens. I'm not going to be selling them until the next bull market, but I would keep an eye on this range over here, this golden ratio, because if we do see a move to the upside in October/November, I do think this is a very, very possible scenario that we may run into this zone here, retest it as resistance, and then come back down, because we have held this level as support for multiple months. And when we lost it in April, we haven't had the back test of resistance. So that potentially may come here in November/October if we have that bullish move, because for the past 3 years, actually, I keep saying 2 years, but I looked at the charts. It's actually for the past 3 years we have seen uptrends in October/November, and I do think this year will be no different. It's just that we're not going to be seeing a very, very bullish move to the upside like we saw last year, because right now we are obviously in a bear market and there's not going to be enough liquidity to pump the prices that high. But I do think if we're going to start climbing from here, then I do think we may see a 75% move for Polygon Matic. Now, Bitcoin started pumping on October 1st immediately. We haven't seen that with Bitcoin today, so we may as well just start pumping towards the middle of October. But keep in mind that we do have the next FOMC meeting on November 3rd, I believe, with the details of the meeting coming out one day later from Jerome Powell, and I do think that will end up in another dump. Okay, so I do think we're going to dump after that. So until that point, we could see a nice move to the upside. After that, we're going to go down, and obviously I can't be 100% sure about that, but every time we've had those meetings, the price did go down because the interest rates were raised. Well, actually, I say that, but before the last time, I believe in August, was it, or was it in July? I think it was back in August when we had the previous FOMC meeting before the one that we had here in September, and they did pump the markets afterwards. But I do think that was a one-off, and I do think they're going to raise the interest rates in November as well, and we're going to see a dump in the crypto markets, which is good for me because I'm going to be buying at the lows. So we're holding our major low here at 74 cents. This is our support level that I told you that we should hold, and we haven't closed. Well, actually, we did close the candle here September 22nd, but September 20. Actually, we closed it September 21st, and on the 22nd, we started pumping above that, and we're holding above that level for now. So that's all good and dandy. But if we start dropping down, I would imagine we would retest this level here at 67 cents. Then you have the 0.5 at 58 cents, and then you have the golden ratio here all the way down to 50 cents. So if we see a major capitulation for crypto, this may be where we bottom out for Polygon Matic. Obviously, if we were to come all the way back down to this low, at that point, I do think Bitcoin would have to come back down to $16,000, and we would need something really, and I mean really bearish for that to happen, because the markets and currencies across the world are dropping, and Bitcoin is holding $19,000. I think that's pretty massive for Bitcoin. And investors are slowly, turning to Bitcoin because they do see how vulnerable the fiat currencies are, and eventually, as all fiat currencies, they are all losing purchasing value, and people are getting smarter by the day, and those who get smarter are going to start investing in Bitcoin. So yeah, I am expecting a move towards the upside in October/November. Don't know how bullish that is, but good swing trade opportunities may be on the horizon. So if we jump into the daily RSI here, as you can see right now, we did see a pullback below this yellow support trend line in September, but that was a little fake out. We're back in the symmetrical triangle here, and as you can see right now, what is happening is we're getting closer and closer to the apex of the pattern. So I do think we may see a very nice break to the upside here, getting closer to the apex, and that would put us, let me get the brush, that would put us at around about the middle of October, and we may start breaking to the upside. We may run into this resistance at 67.6 on the daily RSI. We may as well get overextended into the overbought above the index of 70. So if that happens, that would be a great opportunity to take some profits, because the last time that happened here in July, that was a great time to sell your Polygon Matic. Now, I do want to switch over to the Binance website for a look at some oscillators. So switching over to the weekly chart, as you can see, we have been rejected from the 20 EMA here, but you can also see that we do have a diagonal resistance trend line here that we have been hitting ever since January of this year. So we had one rejection, second rejection in March, another rejection in August, once again a rejection here in September. So after we break through that, that is actually when I think we're going to actually have a very strong move for Polygon Matic, because as you know, after you break diagonal multi-month resistance trend lines, you typically see strong breaks to the upside. So if you catch yourself at this point here and Polygon Matic is breaking out, I would wait a little bit to take profits, because we may get very overextended, okay? So it's better to wait and to sell at the overbought rather than sell too early and, watch the profits go up without you, or watch everyone profit and you're basically left with your cash. So keep that in mind. That's a very important thing. And obviously we have our bottom here at 38 cents. And yeah, we're attacking the 20 EMA constantly on the weekly chart. That's a good thing, but we need to break through it. Now, jumping back into the weekly RSI, as you can see, we are in a falling wedge here, and we just hit the resistance of the wedge once again at the beginning of September, and we're about to attack that resistance once again. So this is a bullish pattern. If we start breaking to the upside, we may see a strong move to the upside here, guys. And if you want a trend line for a potential resistance that we might run into, okay, so you do have a resistance trend line here. We may run into that level, but obviously your technical target would be all the way up here at 74 on the index, and that would be the overbought. And I don't know if we can get there in October/November. I do think we may get there next year. Okay, we may get there next year, and we are probably going to be even higher than that in 2024 once the bull market officially kicks off after the Bitcoin halving. But for now, I would say just manage your expectations, okay? And either swing trade when you really know that the price is overextended to the upside and you're going to see a pullback, or just stake and don't worry, okay? And that's the best advice that I could give you, but I'm not a financial advisor, obviously. So here in August, as you can see, we topped out on the Stochastic Rsi, and that was a great exit in my opinion, because the Stochastic does show you the mid-term overbought position on the asset. And if I go to my settings on the Stochastic, I have the length of the RSI set to 56, and the default setting there is 14. So I just switched it up to have less fake signals, basically, and that means that there are going to be less moves to the downside into the oversold and less moves into the overbought, which means that when they do happen, they have more meaning behind them, okay? So that's the logic behind that increase of the length. So if you're really looking to buy at the lows, I would wait until you get into this zone below the index of 20. That is when you're going to be oversold, just like you were here from February or from January all the way up to June of this year. Okay, so you can see you were here for a good 6 months before you started moving to the upside. And you don't stay up that long, right? You stay bearish longer than you stay bullish. So I would say that you have less time to take profits, but you have more time to accumulate. So yeah, that's why you have to be ready for both outcomes. Have your sell and buy orders ready and set to go, just in case you're not able to follow the markets and you're asleep or you're at work. That's my top one recommendation. But if I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon. I'm gonna catch you in the next one. Goodbye and good night.